From the perspective of global cross-border activity, there continues to be a strong export of capital from Asian investors, mainly into key global gateway cities. So if you look at our current capital flows into major cities, the top three ranking remains broadly the same, with London as the number one destination, Paris jumping from third to second, and New York from second to third. From the perspective of Asian capital into London, the vast majority of that capital has come from Malaysia. Since the beginning of 2010, from a inter-regional perspective, Malaysian investors have spent nearly $3 billion US, predominantly into London, but also into other key cities. What are these investors looking for? Well, it typically is more of the same. Really, since the end of the global financial crisis at the beginning of 2010, there's been a very, very strong focus on core real estate, typically in key global gateway cities like London, seeking good quality A-grade office buildings let to good quality tenants on long-term leases. So as a consequence of that, particularly in the City of London, where we've seen activity from Malaysian and Korean investors, and more recently from a Chinese sovereign wealth fund, this has been the key theme. What that has done is maintained pricing, both yields and capital values, at a very robust level. In many cases now, at or around the pre-crisis pricing. The other trend that we've seen is the emergence of the high net worth investor, or the ultra high net worth investor, that is now very much a feature of the global real estate stage. Given their liquidity, often through IPO events, or indeed just very strong cash flows from their businesses, particularly in Asia, they are able now to compete for very large scale assets, in certain cases up to $500 million US, and therefore historically this would just be the domain of sovereign wealth funds and pension funds. The other key theme that we've been seeing in the last 12 months is the marrying of new sovereign wealth capital with our operating partners. Club-style deals, strategic partnerships, call it what you will, is very much a feature of the global capital markets. We've seen the likes of Norges, the Norwegian Sovereign Wealth Fund, as well as some of the Chinese sovereign wealth funds seeking best-in-class partners in the geographies in which they're looking to invest. This will be a continued theme as asset managers and fund managers seek to find new sources of third-party capital.